briefly introduce yourselves, and then we'll jump right in with some questions. But Lauren, I will start with you.
Thank you, and I'm so pleased to be here. My name is Lauren Belive, and I'm the Global Co-Head of Policy for Ripple.
Turn to you, and what do you make of this discussion around bank deposits and the risk of flight? And is there another contrarian view that actually this could benefit banks in the long run?
Oh, I think this is an excellent question, and I'll pick up where Robin left off. I think the narrative that has come around is that it is a zero-sum issue, and that's really not the case. And so I want to zoom out to the macro level here. How does the movie end? The movie ends, and I think it's specific from the Ripple perspective. Ripple is a 13-year-old company. We're mature in the crypto asset space. We build digital asset infrastructure for B2B platforms. So our banks are institutions, they're financial institutions, they're big banks, they're fintechs, they're governments, they're corporations. And we have a whole suite of products for them. We do cross-border payments, we allow for custody, we have a prime brokerage that manages trading, both crypto and traditional finance, as well as doing some treasury and liquidity management. But one of the crown jewels of our stack for clients is we've launched our own RLUSD stablecoin. And it's a really great opportunity for traditional finance to take advantage of the stablecoin and the rails that they work. It's 24-hour, it's instant settlements, there's great collateral against stablecoins, and it's an immediate kind of liquidity that banks can use that's a cash equivalent. So that it's not going to be a big bang theory overnight, and I think there were some really consequential blockers: the lack of knowledge, the lack of access to stablecoins, and frankly, the lack of regulatory certainty, which we now have with the Genius Act. And because all of those blockers have been coming down, we are starting to see traditional finance truly come to the table. At first it is retail payment processing, cross-border payments, but as soon as people can see that this will also be good collateral for their cash equivalents in their bottom line, you're going to have a real moment where traditional finance and how the movie ends is it's going to be integrated very seamlessly into not just what big banks are using for their business, but how the end user is affected. And so what's happening right now, I think, is in a moment in time, but if we start looking at the scale of how stablecoins is going to be integrated, it will be prudent for traditional finance to come to the table and want to give these benefits to their consumers. So really exciting opportunity.
So, recently we were starting to have more debate and discussion about various types of non-bank entities seeking banking-like charters and potential access to Fed master accounts or the Fed payment system. Share some thoughts on that. How important is that to the ecosystem? Is that a logical next step, or do you see that as a distinct conversation? Lauren, I'm happy to start with you.
Absolutely. I think when we talk about what's going to be a needle mover here, right? You look at the stablecoin industry right now, it's about $314 billion in market cap. I think the first 0 to $314 billion really was driven by retail investments, by crypto investments. But that next 10x going forward, I believe, is really going to be driven by institutional engagement and institutional investments. That's the shift, and that's the opportunity for stablecoin going forward. Now, as I mentioned, Ripple, our clients are big banks, and for us, we are a regulation-heavy first company. When we went to start our stablecoin, we went through New York DFS, which is the third largest regulator in the country under the Fed and the OCC. And now we've also sought a OCC charter, which we were approved for. And a lot of that is, if you're going to be engaging with banking partners, most of them haven't had much exposure to stablecoin counterparties because they weren't regulated yet before. And so those entities now, through the Genius Act, through going through, I would say, very tough regulatory scrutiny of New York DFS, and we enjoy our relationship with them, that's the baseline to really establishing trust through a lot of these banking work partnerships. And that is what, and the Genius Act itself, you need to have a one-to-one dollar backed. You need to have a proof of reserves. There's a lot of heavy AML scrutiny that goes in through the Genius Act, and there's bankruptcy protections. So that eliminates a lot of that risk that the banks are feeling. And so now it makes sense that there's access points that the OCC can properly regulate these entities that are really above board.
Ripple's very focused on financial institutions and the institutionalization of digital assets. tell us about the interplay. Like, do you see the tokenized deposits as a good base layer, and then where do stablecoins play? How are your customers or clients using the technology?
No, absolutely. I think it's really important to note that, so I think it is a very good base layer. I think people think about different tokens for different use cases. So a lot of people are holding and investing into Bitcoin. Bitcoin is really a savings token. Ripple utilizes a token called the XRP token. That is a utility token. It was made to do cross-border payments. It was used to be able to utilize the RLUSD, which is also its own stablecoin. That's also a utility spending tool. And it is a very strong base layer to be able to then look at why people are using it, and then what does it generate for the end user. And I think that's something that we haven't really talked about yet on this panel, is you have banks and institutions, but who's at the end of all of that? There are 55 million Americans right now, 1 in 5 Americans, that are holding and using crypto. They're equally divided by political party. They are equally divided across the country regionally. And they're going to start going to their banks, or they're going to start going to their Coinbase apps and wallets. And it's not just a holding or a savings technique anymore, but it's about how are they using that utility at the end. And that's where I think the banks are going to be coming around and looking to be really innovative in terms of how they're serving their customers.
This is very well said. I'm sorry, I'll just be quick. One of the advantages of these different mechanisms is they serve different financial goals for the consumer, for the business, et cetera. The advantage of tokenization, a tokenized deposit, is it brings money into the bank as opposed to the money being used for other purpose outside the bank. And bring it into the bank as a deposit is important because those deposits, at the end of the day, support lending in the United States, and that's critically important for the well-being of commerce. So different strokes for different folks. I think we can all live together and really serve the American public in the best possible way.